Welcome to today's PDAC webinar, International Deal Gateway, Americas, UK, Europe, which is the 7th of 16 sessions in the Fasken series. My name is Virginia Schweitzer, and I am the co-managing partner of Fasken's Ottawa office and a member of the PDAC Program Committee. Before we begin, I have a few housekeeping notes. At the end of the webinar, please click the survey link underneath the video to fill in our survey. Your input is greatly appreciated. During the webinar, if you have a question, please type your question into the chat box beside the video. Today's panel will do their best to answer all the questions they can. If you require technical support, please click the Tech FAQs or Tech Support chat, which is located under the question chat box. The slides from today's presentations can be accessed from the slides button under the video player. This webinar is also being broadcast on YouTube Live. Just a quick note that there will be another International Deal Gateway, Asia, Australia at 8 p.m. Eastern this evening. And now I will turn things over to Jeff Dennis, Counsel and the firm's entrepreneur in residence from our Toronto office.
Hi, everyone. Thanks, Virginia, and welcome to everyone. We're very excited to host this International Deal Gateway Opportunity Showcase. As you heard, I'm Fasken's entrepreneur in residence in our Toronto office. I'm a lawyer who joined Fasken after a 25-year career as a serial entrepreneur. And the focus of my practice is working with fast growth emerging companies, regardless of the sector. Today's event is being co-hosted and curated by International Deal Gateway. And in a moment, I'm going to introduce Liz Priestman, CEO, and Yolande, Lougheed, Director of Marketing and Member Engagement. The focus of this session is a bit of a departure from much of our PDAC webinars because they're mostly focused on content education. While I'm sure you're going to learn a lot today, we thought we would offer something different, a showcase of different companies from doing work in different jurisdictions with different minerals. I'd like to just make a personal note about how this event came about. You see, I'm a customer and raving fan of International Deal Gateway. They are a fantastic organization that brings together principles to do deals, buy, sell, finance. And I'm sure Liz and Yolanda will tell you all about it. But what I wanted to share with you was during the pandemic, they spun up these fantastic deal huddles where members of their organization get together for an hour on a Zoom call, moderated. And the agenda is what can you offer to the group and what can the group offer to you? And during a pandemic when we're all stuck at home and it's hard to do business and figure out how to, network and find deal flow, it's been a fantastic way for me to get out of my attic here. So I highly, highly recommend you investigate Deal Gateway. And I'm really, really grateful for them putting together this fantastic panel. So over to you, Liz.
Jeff, thank you. We are grateful to you and the Fasken team today for the opportunity to host our panel of leading mining and resource experts. Good afternoon, everyone, and wherever you are in the world today, thank you for joining us. I'm Liz Priestman. I'm the CEO of International Deal Gateway. We're a global private network of founders, CEOs, investors, and family offices. We've grown to a community of 7,000 active members like Jeff with over 10 billion in deal flow. Our members connect on our trusted platform. They share investment opportunities, mergers and acquisitions, and deals that are not available through traditional channels. I hope you'll all join us at dealgateway.com. We also host family office investor events all over the world and virtual roadshows. Today's presenters are a collection of our top resource companies that we've hosted over the past 2 years. Each presenter is going to deliver a fast 7 to 8 minute overview of their company, giving you 2 to 3 minutes for Q&A. Please post your questions to the chat box, and my partner from Deal Gateway, Yolande Lougheed, will entertain the Q&A with each of our presenters right after their presentation. Today's lineup includes several precious metals, gold, silver, and copper, as well as uranium and graphite. And I personally can't think of a more exciting way to start the day than introducing you to Lucara Diamond. Yolande and I had the opportunity to meet Lucara's founder, Eira, and hear Lucara's presentation twice in London. They are one of the world's foremost producers of large, high-quality diamonds in excess of 10 carats, including 3 world record finds. So you can appreciate why I'm excited about it. While you won't have the opportunity to hold the replica of the 1100 carat Lasete La Rona in your hands today, I know you're going to find Eira's presentation entertaining and educational. Lucara trades on the TSX under LUC. A very warm welcome to you today in Botswana, Eira Thomas.
Thank you very much, Liz, and it's a pleasure to be here. And I too just want to give a great shout out to your organization and all that you do. It's been particularly helpful for Lucara in attracting a much broader audience of investors. So thank you very much. I'm going to go to the first slide, please. And I just want to, next slide, please. I will be making forward-looking statements, and I do encourage everyone to review this cautionary statement, which is available on our website. Next slide, please. For those of you that are unfamiliar, Lucara is a high-margin, mid-tier diamond producer whose flagship asset is the 100% owned Karowe Diamond Mine, which is situated in north-central Botswana. We've also become renowned for our production of very large, high-value white diamonds. We've been in production for close to 8 years, and we've produced more than 3.2 million carats, generating revenues of over 1.7 billion. And an interesting fact, we've actually paid out $271 million in dividends between 2014 and 2019, which is well in excess of the capital that we've invested in our operation to date. We did make a decision to suspend the dividend in 2019 in favor of investing in an exciting growth opportunity for our company, and that is the expansion of our mine underground and extending our mine life out to 2046. And I will talk about that more just in a moment. The other thing I think that Karowe really has become renowned for is our incorporation of innovative design and new technology. And we are, in fact, the first diamond mine in the world to use state-of-the-art XRT technology for primary diamond recovery. And that has been really important because it's allowed us to recover our large, high-value diamonds without damaging them. And we are the only mine in recorded history to have ever recovered 2 plus 1,000 carat diamonds. Next slide, please. And on this slide, we will be showing you a sampling of some of the historic diamonds. Liz had mentioned one, the 1,109 carat Lasete La Rona. We also have the largest diamond to come out of Botswana, the 1,758 carat Suelo. And up in the right corner, the 813 carat Constellation, which sold for a record price of $63 million. Next slide, please. And I don't have time to get into this, but in a few years, basically 8 years since we started mining, Karowe has recorded 4 of the world's top plus 300 carat diamonds. And this is going back to 1893, and we currently account for about a quarter of the world's largest diamonds greater than 300 carats. Next slide, please. So moving into 2020, our operations continued uninterrupted in 2020, and we did deliver safe, stable production consistent with our plan. However, rough diamond prices plunged in the early stages of the pandemic, and Lucara made a deliberate decision not to sell any diamonds larger than 10.8 carats after the first quarter. We also necessarily scaled back our plans for the underground project and worked quickly to implement several operational changes to help drive down our costs. without impacting our future ore mining or carat recoveries. Despite these challenges, however, it was a record year for us in terms of the recovery of specials, that is diamonds greater than 10.8 carats in size. And throughout the year, we recovered 34 stones in excess of 100 carats, of which 8 stones exceeded 200 carats. The global pandemic also became an important catalyst for sales through Clara, our unique, secure, web-based digital sales platform for rough diamonds between 1 and 15 carats in size. Clara's customer base tripled from 25 to 75 customers, and we are now actually maintaining an active waiting list. I think it's also important to note that Lucara went into the crisis with a strong balance sheet. We had cash on hand, no debt, and access to liquidity. This really afforded us great flexibility with our approach to sales, and we made a deliberate and strategic decision to move away from selling our large diamonds through traditional rough tenders in favor of an innovative supply agreement with HB Antwerp for the highest value part of Karowe's production. This led to regular cash flows and the opportunity to participate in the and additional revenues that are actually generated from the sale of polished diamonds, and I'll talk a little bit more about that in a moment. We feel confident that by refusing to sell our large diamonds at low prevailing prices, that we really helped protect the prices for these large high-value polished diamonds, and the result has been a sharp V-shaped recovery in prices for these goods. Next slide, please. In terms of our COVID response, I just want to mention that our mine remains fully operational, albeit adhering to strict protocols implemented almost a year ago with respect to social distancing and hygiene, really with a big effort focused on keeping our workforce safe. 98% of our workforce actually hails from Botswana. Next slide, please. As I mentioned at the outset, 2020 was a record year for the recovery of diamonds greater than 10.8 carats in size. These diamonds regularly account for more than 70% of our revenues. And as you can see from the chart in the lower right, we continue to recover these diamonds consistently, month by month, year by year. What's more, they are a really important value driver for the planned underground development, from which we will have greater access to the high-value South Lobe, which is responsible for many of our record historic recoveries, such as the Lesedi and the Sewelô. Next slide, please. Looking at the market, I would say that volatility really characterized the rough diamond market in 2020, with rough diamond prices having been discounted by as much as 40% at the height of the pandemic. Fortunately, polished diamonds did not experience a similar fate, and though demand for polished was initially weak when the pandemic began, towards year end, it became apparent that consumer demand for diamonds and diamond jewelry had recovered to near pre-pandemic levels and has actually been outpacing demand for other luxury products. Next slide, please. As mentioned earlier, to avoid selling our high-value rough diamonds at deep discounts during the pandemic, Lucara made a strategic decision to enter into a committed supply agreement with the HB Group, and that began in July. Under the terms of this arrangement, Lucara is paid an initial price based on the estimated polished outcome determined through state-of-the-art scanning and planning technology, with a true-up paid on actual achieved polished sales when they happen, less a fee in the cost of manufacturing. Several diamonds delivered in late 2020 under this agreement do remain in process, and so they will continue to deliver significant revenues for the company well into 2021. Next slide, please. We also negotiated and concluded 2 unique collaboration agreements with HB Antwerp and Louis Vuitton, the world's leading luxury brand. And this was really about an opportunity to participate in the creation of high jewelry collections from the historic 1,758 carat Sewelô shown here. And on the next slide, please, the beautiful 549 carat Sethunya. And I do want to mention that Louis Vuitton fancy polish shapes command some of the highest polish prices in the market today. And under this agreement, Lucara will receive payment for Sethunya based on the final polished outcome no later than the 4th quarter of 2021. Next slide, please. For Clara, our secure web-based marketplace for rough diamonds under 10.8 carats, next slide, please. We continue to hold biweekly sales, and that continued again right through the pandemic, which gave us regular cash flow and good visibility into pricing trends. And we increased our customer base by 178% and are maintaining an active wait list. We also transacted our first third-party goods through the platform in 2021, which remains a top priority for the platform, in 2020. And we will continue to ramp up on third-party sales in 2021. Next slide, please. And I think here what we really want to highlight is, we're basically selling our diamonds three ways now: through Clara, through HB, and through traditional tenders. Next slide, please. And then I want to just talk very quickly about our key growth project. And this is the expansion of Karowe Underground. And in 2020, we continued to make good progress towards this effort. We spent about $18.8 million under a rescoped budget, which was really focused on de-risking the project schedule, procurement of long lead equipment, and detailed mine design and engineering. Towards year end, we achieved a major milestone with the receipt of a 25-year extension of the mining license at Karowe out to 2046. Which is sufficient to cover us through open pit mining and our current plan out to 2040. We remain very engaged now with a broad group of lenders to complete an approximately $200 million debt financing to supplement cash flow from operations that will fund the majority of the estimated $514 million capex. Next slide, please. And I'm going to, I think, skip over this just to really point out that the year-over-year decrease is really as a result of the timing of sales. But I do want to point out that our operating costs definitely improved in 2020. On this slide, we're really highlighting the fact that sustainability underpins everything we do at Lucara. We are focused on transparency and strong stakeholder engagement. You can see the various organizations that we are associated with, including the United Nations Global Compact. And we do produce an annual sustainability report that I encourage you to review on our website. So I think in conclusion, I'd just like to say that while 2020 was an exceedingly difficult year in so many ways and for so many companies, we were fortunate to be able to find innovative ways to maximize value of Karowe's unique production profile and to realize one of the many benefits of Clara. As we look into 2021, we see evidence of a stronger, better diamond market, and our long-term outlook for diamonds remains very robust. We will continue to ramp up as well with Clara. Thank you very much.
Thank you so much, Eira. We always love your presentations. I'll jump right into questions here. So the first one is, do you have any thoughts on the recent talk of physical-backed diamond ETFs?
Yes, I've been following that along, and there is an interesting initiative underway that I think actually has probably the most traction right now, in that they are working to create these diamond bars and coins, which will standardize, the value of these bars and coins. And I think it's quite interesting. And I think if that happens, that's going to be very positive for diamonds that are being consumed for diamond jewelry.
Okay, wonderful. Thank you. Second question, could you speak more about how Clara has progressed through the pandemic and how things are going with the addition of a third-party supply?
Yeah, listen, it's been our silver lining, I have to say. Travel restrictions meant that people couldn't go and transact diamonds in a traditional way. So Clara is the only digital marketplace of its kind in the world where manufacturers can buy individual diamonds without leaving their desk. So we saw, interest and demand kind of ramp right up. It's now at the point where it's exceeded what we can supply with our little mine at Karowe. And we did start third-party sales last year, and we are in discussions now with larger producers to open up the platform in 2021. I think we're at an exciting inflection point, and I would say stay tuned for our progress on that this coming year.
Okay, wonderful. I guess that's all the time we have for questions. So thank you again, Eira.
Thank you very much. Thanks, Yolande. Thanks, Elizabeth.
Thanks so much, Eira. Our next presenter is Eric Desoniere, CEO of Nubomonde, a leading Canadian graphite company, just recently recognized as a TSX Venture Top 50 winner. Congratulations. Nubomonde is striving to become a key element in the sustainable energy revolution. With low-cost operations and high ESG standards, Nubomonde aspires to become a strategic supplier to the world's leading battery and auto manufacturers. Nubomonde trains on the Venture Exchange under NOU. Please welcome Eric.
Thank you very much, Liz. Thanks, Yolande, for having me today. Very appreciated. So let's stay in the carbon topic. So I know our graphite is not as beautiful as Lucara's diamond, but we really believe that graphite carbon actually will be very useful, very important to decarbonize our whole economy. So very fortunate to talk to you about our vision and what we are achieving with our project today. So maybe next, I'll be making forward-looking statement, obviously. So please read this on our website. Next slide. So what we do at Nubomonde Graphite, so the early vision that I had when we started the company in 2012, it was to develop the largest graphite operation in the Western world to actually serve the growing lithium-ion battery market. So to do that, in order to achieve that, we need first to find a mine and a concentrator. So we took 3 years to discover the Matawini deposit in Saint-Michel-des-Saints, located 2 hours north of the Montreal Island. You recognize on the sketch the St. Lawrence Seaway. So the Matawini graphite project was just permitted actually 3 weeks ago after exchanging 10,000 pages, 5 years of hard work, doing all the feasibility study, environmental study with the government. So now we're really excited to get into the construction mode, and it will be fully operational by the end of 2023 at the mine site. And we are already operating a demonstration plant, a stage 1 plant since 2018 on the Matawini project. So then the idea is to sell in the traditional market and specialty graphite business, flakes, and 60% of our production will be sent into Bécancour for further transformation to be transformed in anode material for lithium-ion batteries. So that's the 2 projects that are super important in the company. You can compare it to the vineyards in Saint-Michel-des-Saints and the very expensive wine chemical ideas more in Bécancour. And everything made carbon neutral, super important, using hydroelectricity in Quebec. And we are developing the first open pit all electric mine in the world since 2017. We're working on it, and our full feasibility study is on that concept, you know. So next slide. So quickly on the demand, obviously, all raw materials for lithium-ion battery are expected to have a humongous growth. Which one of the 4 main raw materials will be the bottleneck is for you to decide. But for graphite specifically, there's 192 plants now being monitored by Benchmark Minerals in the UK. And it will be just short of 2.5 million ton more needed by 2024. So, I mean, it's a very big growth from a million ton roughly market today. So the growth is there. Maybe next slide. So there's a lot of discussions on the cathode material, lithium, and a lot of different chemistries on the cathode side. And we see company like Tesla, just 2 days ago, they announced that in Nevada, actually, they will start to do LFP chemistry to diversify from the NCA to make sure that the cathode material procurement, there's no significant bottleneck on nickel, on cobalt, for instance. On the anode side, it's always graphite for the 192 plants. It's roughly 1.2 kilogram per kilowatt hour with an added content of silicon, but graphite is a very important material for the time to come. Next slide. So what we want to offer to the Western world customers, it's it's really an Asian thing historically, the lithium-ion market. Now there's about the third of the growth is projected to be in the Western world, and there's no supplier of anode material, graphite anode material. 100% of the supply comes from Asia. So what we want to develop, what we want to offer the market, it's at cost parity, at a low cost projection, to develop a fully integrated business model, all secured in friendly Canada, traceable, carbon neutral, and to really de-risk and offer an alternative to the current Chinese supply. So that's something that is super important for the OEMs and the battery maker that are developing big projects in the Western world. The next slide. So Matawini project, we won't go in much detail. We can go to the next slide. So quickly, our feasibility study shows important things is that we have a low cost operation thanks to our strip ratio, our location, our electricity rate. A lot of good things make our OPEX in the first quartile of lowest cost producer, very competitive with anyone on the globe. And importantly, we do have a very good metallurgy. So flake size distribution, purity after flotation allows us to have a very good quality of concentrate flake. And it's a long life mine, and 100,000 ton, it is 5 times bigger than the current biggest supplier in the Western world, which is Imerys Graphite and Carbon in Quebec. The mine is depleted, so replacing them in the traditional market, specialty graphite, and also allocating most of our production for the growing lithium-ion battery market. So if we go to the next slide. So if we compare our economics with all other JORG or 42-101 deposit who did the feasibility study, really the strength of our project, if everyone assumes same pricing assumption, is to have a very good basket price for our product minus a low cost profile. So we have the best potential EBITDA per ton. Next slide. And we are proving up since over 2.5 years now, we are operating a demonstration plant where we have produced around 1,000 tons and we have qualified our product with customers. We have signed offtake for the flakes, and that's what we have trained people. We have de-risked the project significantly on site in Saint-Michel-des-Saints. So it was a very important decision to do that early enough in the project. And based on that experience, if we go at the other slides, in Bécancour, we do pretty much the same thing. Next slide. So that's where we will take the grapes from Saint-Michel-des-Saints. That's exactly our feasibility study, where we will transform those grapes in a very expensive wine and coated spherical graphite. So Roskill priced that at around $7,000 a ton. So what we're doing in Bécancour, next slide, we're doing the same thing. So we do a stage 1 that we're building. It's a more chemical project. So we cannot do that in our garage, shaping, purification, coating. So we have elected to do it in an existing facility in Ullins. Ullins is the largest chloralkali supplier in the world. So we've negotiated over 18 months to settle our stage 1 plant in the middle of their facility. And we have purchased the land across the street to build our stage 2, our commercial operations. So shortly, we will go out with the economics of this stage 2 plant, which will be the largest anode material transformation plant in the Western world. So shortly, we'll have more economics on that. Next slide. So quickly, you can put there's 5 clicks there. So we have the most advanced, very well timed with the market. Obviously, you need to be lucky, and I'm lucky enough that everyone's going all electric these days. So, and we are the most advanced, always worked hard on the project. We're developing the largest scale, fully vertically integrated. This is super important for the customer, carbon neutral, and we have the best alternative, we believe, for the procurement departments of all the OEMs if they want to de-risk from China. And we have great shareholders, Quebec government, the Palingers Group, the Caisse de dépôt, large long-term pension funds who want to develop this project for the good and for long term. So maybe last slide. Good. So we have about 40 million on the balance sheet now. We have a market cap in Canadian 780. We've announced last week that our intention to evaluate a potential listing on the US market to be uplisted from the venture to a major exchange. We're doing this work now, and we're supported by the best people on this planet to develop the project.
Eric, sorry to jump in, but we're just in honor of time here. Can we just start asking you a couple questions?
Sure, go ahead.
Okay, the first one that came in is actually my favorite. It lets you speak to your wonderful videos. Colin wonders, Eric, did Elon ever call?
Yeah. We cannot say. Obviously, we're talking with all the OEMs in the Western world, and Good discussion with all of them. I love them all equal.
For anyone watching who hasn't watched your videos, they're wonderful. They're very entertaining. Okay, so second question: how does your product offering compare to that of China's?
Obviously, we don't want to be the China supply. It's low cost. We can achieve the same low cost situation in China thanks to our low cost electricity and other great things we have. But we want to offer more value to our customer. We want to offer carbon neutrality, fully traceable product in one of the safest jurisdictions in the world, fully controlled from the rock to the finished product. So I think it's something very important to be diversified for all the procurement department in the Western world.
Wonderful. Thank you so much, Eric. That's all we have time for, but thank you so much for that presentation.
Thank you very much.
Thank you, Eric. That was always great to hear the updates on Nouveau Monde. Our next presenter is Rockridge Resources, a mineral exploration company focused on the acquisition, exploration, and development of mineral resource properties in Canada, specifically gold and copper. The company's core gold project is the Rainy Project, which is a high-grade gold exploration project located in the same greenstone belt that hosts the world-class Timmins and Kirkland Lake Lodge gold mining camps. Rockridge trades on the TSX Venture under ROCK. Please welcome Jonathan Wiesblatt from Rockridge Resources.
Good morning, Liz, and thanks for having us. My name is John Wiesblatt. I'm an advisor to Rockridge. In the effort of time, let's get to it. We have just 7 minutes to go through everything. So the strategy of the company is very simple. It's to participate in historical, prolific mining districts in favorable mining jurisdictions. We plan to apply modern exploration techniques to assets, resources that have not been the beneficiary of those modern technologies in the past. We're bringing a more modern process to mining in good jurisdictions. That's the bottom line. We're focused on base metals, precious metals in Canada and the US predominantly. There's 2 assets in the company at present. The first is the Rainy Gold Project in Ontario, which is a high-grade gold discovery in a world-class mining jurisdiction. The second asset is the company's flagship copper VMS play in Saskatchewan with a significant copper resource and excellent discovery potential. We're backed by and supported by a great team with many decades of experience. Next slide, please. So here's a quick snapshot of the team. We're led by Jordan Tremble, who's the president and founder of the company. Currently, Jordan's the president and CEO of Sky Harbor Resources. He has a very strong background in corporate finance and strategy, deal structure, and capital raising. Grant Ewing is the CEO of the company. He's got 25 plus years of experience in the mineral industry, with many as a senior executive. Previously, Grant was the president and CEO of Kiska Metals, which was acquired by Arico Metals. He was also the president and CEO of Acadian Mining, which was sold to Atlantic Gold. Joe Gallucci, some of you might know, is the director and head of mining banking at Laurentian Bank. He's been involved with raising over $1 billion for resource companies in Canada, specifically in base metals. Rick Kazmersky is an experienced geo with a focus in Saskatchewan, was the exploration manager at Cameco, which will come in quite handy for our efforts in Saskatchewan. He also founded, built, and sold JNR Resources, which was acquired by Denison Mines. Ron Nedoletsky doesn't need much of an introduction. He was a longtime participant in the Canadian mining industry. He was directly associated with a number of major discoveries in Canada, and these discoveries have become mines. He's also the recipient of a number of awards for excellence in the mining industry in Canada. And then there's myself. I have over 20 years of experience in the investment industry. I was an institutional investor of a Canadian long-short multi-strategy hedge fund for almost a decade. I was the manager of the Sprott Canadian Equity Fund for half a decade. And I was recently a portfolio manager and an internal CIO for one of the largest family offices in Canada. I have a long history of researching and investing in the Canadian and North American resources sector, and I'm currently a strategic advisor to Rockridge, but looking to come on in a more formal capacity in the very near future. Next slide, please. So here you can see we have a very tight capital structure, 52 million basic shares outstanding, a market cap of approximately 7 million. We have some cash in the bank with no debt. It's a tightly held stock by management and founders and a few notable shareholders. Next slide, please. So this is one of my favorite slides. The company is extremely bullish on the copper markets at present, given the tightening of supply and growing demand across the ecosystem. Growing demand is coming from increased use in electric vehicles and other industrial products, plus a rebound in emerging markets. This chart is the total enterprise value to total resources on a copper equivalent basis of other junior North American copper-focused peers. The chart shows the significant undervaluation of Rockridge at approximately 2 cents per pound versus the group average at 10 cents. And even its closest comparable by geography, Foran Mining, which is being valued at 16 cents or 8x the value of Rockridge. So given the current valuation, the existing and sizable resource at Knife Lake, the company's flagship asset, the potential for significant exploration upside, and start of an exciting drilling program later this month in Saskatchewan, we see a significant re-rating for Rock in the short to medium term investment horizon. Next slide, please. So this is the company's flagship asset, Knife Lake. Rockridge will own 100% of the asset after completing its exploration programs on this property later this year. We're located to the northwest of Flin Flon, to the northeast of SSR's CB mine. We have very good access to infrastructure, including hydroelectric power to the south, winter road accessible. The Knife Lake asset was strategically acquired when copper prices were much lower and in the $2.50 to $2.60 per pound range. Next slide. There's an indicated resource of 3.8 million tons at just more than 1% copper equivalent, an inferred resource of approximately 8 million tons at 0.7% copper equivalent, approximately 200 million pounds of copper with very limited exploration outside of the core deposit. The deposit's 80% copper with a bit of silver, gold, and cobalt. The higher grade zones are at surface, which makes the deposit ideal for open pit mining. Most of the historical work consisted of shallow drilling at the deposit area with very little regional work and deeper drilling below the Knife deposit. The asset was discovered in the 60s and 70s. Director Ron Nidalitsky was also around during the days of the discovery and is very familiar with the asset. We're very happy to have him on our board. The asset has traded a few hands in the past few decades, but most recently was staked and acquired by Eagle Plains after the previous owner failed to make a mining lease payment. Rockridge has subsequently done a deal with Eagle Plains to acquire 100%, and we're obligated to spend $1.7 million on Knife between now and next year in order to earn 100% of the property. The next two slides, so 8 and 9, if we can just go to the fast forward 2. These slides just highlight the exciting activity happening in the province of Saskatchewan and at other projects. We believe Saskatchewan is an emerging jurisdiction for high quality resource discovery, development, and production. So, okay, this is a good slide. The Knife Lake deposit is near surface, as I mentioned. It's a VMS deposit occurring a few meters below surface with a known dip length of up to 400 meters. The deposit is open at depth and a long strike, making it ideal for expanding the resource. We are currently undertaking a drill program at Knife Lake to set out to commence later this month. A few of the drill holes will test the deposit below the known one. Next slide. Knife Lake is interpreted to be a remobilized shallow VMS deposit. VMS deposits typically host clusters of these deposits with high potential to discover more deposits in the region. There's potential for zones below the known shallow deposit. The depth extent has never been tested. The upcoming drill program will look to test these zones. The company's technical experts believe there could be something much larger and more significant at depth. We also apply downhole geophysics at the deposit to test this modern exploration. This modern exploration technology has never been applied at Knife Lake. Hud Bay has been using this technique for years on its assets and has found it to be very successful in similar geological settings. Next slide. So there's strong discovery potential in and around the deposit as well as at the regional targets on the 31,000 hectare property. We just completed an airborne geophysics program and drill testing for the upcoming program are being defined now. We're planning to drill 2 to 4 holes on the east of Knife Lake at the Scimitar location shown on the map. We're also expecting to drill 2 to 4 holes at the Gilbert location just west of the deposit. These two areas have similar geophysical signatures as the Knife Lake deposit. We don't believe the Knife Lake deposit is a one-off, and one of the goals of the upcoming program will be to seek out the primary source of VMS. Next slide, please. Let's go through this one really quickly. The other asset in the company is the Rainy Gold Project, located 110 kilometers southwest of Timmins. We own 100%. It's 35 kilometers east of the Nubomonde mine. We've had some very successful drilling programs, which you can see on the slide, over the last 2 years. Next slide, please. So in conclusion, we continue to develop Rockridge as an emerging Canadian North American mineral exploration and development company. We remain active in M&A, looking for assets that have been underexplored, especially with more modern exploration methods located in safe and well-known mining jurisdictions. We maintain a very conservative approach to M&A, specifically when it comes to asset valuation and prices paid. Resource expansion at the flagship Knife Lake in Saskatchewan is a priority. We're well financed for the foreseeable future. It's also a great team and significantly undervalued. Thank you very much. Happy to take your questions.
Thanks very much, John. I'm going to step in for Yolande for a moment. Great presentation. First question that came in, how does a new small cap company like Rock wind up with an asset like this?
Sure. So it's interesting. The company has changed hands a number of times in the past. In 2009, Ursa Major International was acquired the Knife Lake asset and its surrounding properties. Ursa changed its name to Minova Gold, and they had very little focus and capital spent on Knife Lake at the time. In 2017, the Knife Lake mining lease lapsed and the area became open for staking. And this was the first time in history that a property in Saskatchewan with a mining lease had expired. So very fortunately, Eagle Plains in 2018, which is a prospect generator, they staked the area of the expired leases, and Rockridge very strategically negotiated an option to acquire 100% of the project in 18 and 19, and then went on to complete its inaugural drill program in 2019. We published our first 43-101 just last year, which gave us the resource estimate of approximately 200 million pounds copper.
Fantastic. John, thank you. That was a very exciting presentation, and best wishes.
Thank you.
On to our next presenter. David Cates spends more time in northern Saskatchewan than anyone I know. David is the CEO of Denison Mines, a uranium and development and exploration company in the Athabasca Basin in northern Saskatchewan. The Athabasca Basin is home to the world's largest and highest grade uranium mining and milling operations. Today, uranium is a very important element, providing us with nuclear fuel, a zero-emission clean energy source. Denison Mines trades on the Toronto Stock Exchange under the symbol DML. Please welcome David Cates.
All right. Hi, Liz. Thanks very much for that. Yes, we are an Athabasca Basin, northern Saskatchewan uranium development story. We also trade on the NYSE American under the symbol DNN. And right now we have a market capitalization of around $1 billion Canadian, or around 800 million US. So let's go straight into the cautionary statement slide next. This presentation, like many of the others here, will provide a brief overview of the company, but will also include forward-looking information and some technical disclosures. So please refer to this slide and read the cautionary statements, or reference our technical reports where appropriate. Now let's move on to the market quickly on the next slide. We have seen uranium stocks rally significantly over the last 2 months. That does seem to be reflecting a growing recognition from generalist investors in the role that nuclear energy must play in the decarbonization of global power grids. But with that, there still continues to be a fair amount of uncertainty around the timing and extent of uranium market recovery. So our view in this regard is that there are several positive market developments that have occurred in recent years that continue to point to improving market fundamentals and truly the beginning of a new uranium contracting cycle. Now, our business strategy is designed to exploit these fundamentals and position the company to re-rate from developer to producer at the time when the uranium is needed, which is projected in the mid-2020s. Now, this story has been developing over many years. The demand narrative has improved considerably from where we were 10 years ago this month in March 2011 with the Fukushima nuclear incident that followed from the Japanese tsunami. Now, on the and really the exciting point now is that we have resumed, or we've achieved, the level of utility demands pre-Fukushima now for the first time since that tsunami a decade ago. So demand has been improving, but on the supply side, we've seen significant curtailments, and that's what's defining our market right now. In the last 2 to 3 years, we've seen the world's largest and most influential producers turn off their mines or scale back production to the point where we now have a significant drawdown of inventories that had accumulated over past years, because we do have a significant primary production deficit. And that's been accelerated by mine shutdowns connected to the COVID-19 pandemic, which certainly defined our market in 2020, but have continued now into 2021. Now, Denison is well positioned to take advantage of these market fundamentals and improvements therein, based on our diversified portfolio of assets in the Athabasca Basin. So let's move to the next slide and look at our portfolio. Our flagship asset is a 90% interest in Wheeler River, which is the largest undeveloped uranium project in the infrastructure-rich eastern portion of the Athabasca Basin. Now, this project is our clear focus. We're focused on moving it through an environmental assessment process and building the next new uranium mine in the Athabasca Basin region. We also own a 22.5% interest in the Mclean Lake joint venture, and that includes the Mclean Lake mill and undeveloped uranium deposits nearby. Now, the mill is what you're seeing on the slide here on the right-hand side. It's processing all of the mine production from the Cigar Lake mine under a toll milling agreement. And even with that production, the mill has 6 million pounds U3O8 per year in excess license capacity. And that capacity, that excess capacity, is really well suited to our development portfolio. So that includes our Griffin Deposit at Wheeler River, as well as our Waterbury Lake property and our Midwest and Mclean Lake projects. We have completed a series of financings in the last 12 months. And so we are very well funded with over $65 million in cash on the balance sheet. So for context, let's quickly flip over to the map of the Athabasca Basin. Just to locate the projects for you here, it does highlight that we have a large land position, primarily surrounded by existing regional infrastructure from existing uranium mines and mills. But again, our flagship is Wheeler River down in the southeastern quadrant, where we have a 90% ownership interest, and we do have 2 different high-grade uranium deposits there. So let's move to the next slide, where I can summarize Wheeler River in one place. The project has a 43101 compliant pre-feasibility study that we completed in late 2018. The headline was the Phoenix deposit emerging as potentially the lowest cost uranium development project in the world. Now, we achieved this by combining Phoenix, which is the world's highest grade undeveloped uranium deposit, with the world's lowest cost uranium mining method, which is in situ recovery, or ISR. In this case, we would process our product to a finished product on site at Wheeler River with a small processing plant. And we produced some very impressive cost results. Operating costs just over $3 US per pound, and fully loaded all-in costs. And important to understand that this includes initial capital, sustaining capital, and operating costs per pound under $9 US. Now, Phoenix was approved for advancement by our board in late 2018, and the environmental assessment process was started in early 2019 and continues today. 3 kilometers away, we have the Griffin Deposit. This deposit is not amenable to ISR mining, but does make for an excellent underground operation, designed to leverage both the site infrastructure at Wheeler that would come from the Phoenix operation, as well as the excess capacity at our Mclean Lake mill. So operating costs here are very competitive, under $12 US per pound, and those same all-in costs here are estimated in the low $20 per pound range. Taken together, 14-year mine life coming out of these two projects, and expected all to start with initial capital costs for our Phoenix deposit in the range of $300 million Canadian. So let's flip to the next slide here, and you'll see that the project development plan is based on a phased approach, with Phoenix moving forward into construction and production first, and that's designed to minimize our upfront capital costs and reduce development risk and construction timelines. And then Griffin following, with the development funded by Phoenix cash flow. And so that'll add scale into the 2030s when we expect even higher uranium prices and utility contracting to heat up. Now, we're currently in the environmental assessment and feasibility study stage for Phoenix. And we've recently resumed our EA activities in January after a temporary suspension through some of the pandemic. If we flip over to the next slide, you'll see a good snapshot of the economics. So our base case scenario here supports the development of Phoenix even today with very low uranium prices, because we've used a very conservative price deck. And so for Phoenix, we've used independent UXC price deck, and this is a consulting firm or price reporter in the sector. And it's based on constant dollars from 2018, and it starts at with us selling Phoenix pounds as low as $29 per pound. And what's interesting there is that is essentially where the spot price is today, which is something that you will not find from any of our competitors. Everyone is using a $50 type price deck. Now let's wrap up with slide 9 here, which is a representative cost curve. And what you can see from this is that Phoenix has the potential to compete with the lowest cost assets in the world, including ISR production from Kazakhstan or the McArthur River mine, the world's largest and highest grade uranium mine. And Griffin is positioned really well in that bottom quartile of the cost curve as well, competing with Olympic Dam and Cigar Lake. So to pull it all together, I'd say that Denison is building a portfolio of low cost development assets at the right time in the uranium cycle, and that we have the right asset to lead the charge with the low upfront capital costs and operating costs at Phoenix.
Thank you so much for that, David. Sorry to jump in, but just want to get a question here. Thank you so much for that. The first question we have is, has the sentiment for nuclear energy changed much with the recent increase in focus on the global energy transition and electrification?
Yes, we have seen a significant pivot, I'd say, in the last 6 months, probably linked in with some of the US election progress in terms of the focus on climate change in the United States. Nuclear energy is something that was, I would say it was not really clearly in the green energy mix until the Biden administration has really positioned it there. And even the government in Canada has come a long way to recognizing that achieving any of the net zero targets that are being set is virtually impossible without committing to and even growing nuclear energy in the power mix around the world.
Wonderful, thank you. That's all the time we have for questions, but thank you so much for that presentation.
Thank you, David. Our next presenter is Great Bear Resources. They're one of those companies with a stock that's just continued to climb over the past year. Really exciting story. They're a well-financed gold exploration company managed by a team with a track record of success in mineral exploration. They're focused on the prolific Red Lake Gold District in Northwest Ontario. Today, we're joined by Chris Taylor, President and CEO. Great Bear trades on the TSX Venture under GBR. Over to you, Chris Taylor.
Thanks, Elizabeth. I think I was just watching all the other presentations with interest, and I think we're just going to use a few of my slides, and we'll keep it as brief as possible. So that way, anybody that's has a genuine interest in Great Bear can follow up with me or check out some of our materials on the website. So Great Bear, to take it from the top, we've done very well over the last 4 years in a row. In fact, we've been growing steadily because we've been finding a lot more gold in the ground. And Great Bear is focused in the Red Lake camp in Ontario. What you're looking at on the front piece of the presentation here is a picture of the property. So you have to think when you're looking for a gold project and you're looking for a big gold project, do you want that project to be in the middle of nowhere? Do you want it to be up on the top of a mountain? Do you want it to be underneath a body of water? None of those are factors with Great Bear. This is a major gold discovery, which is right beside the highway in a major mining district. And it's about a 15-minute drive outside of town, which is where the nearest big mine is located. So it's been absolutely excellent and a privilege to work on this project. So with that, I'm just going to go to the next slide. I'm going to make some forward-looking statements, of course. I'll try to keep that brief. This material is all on our website as well, if you want to have a look at it. Next slide, please. So here we are located in Northwest Ontario. You're plugged into the highway network, the power network, everything else that the rest of the province enjoys. We have a project that we own 100%. So all of the benefit of the project flows to our shareholders. And Great Bear has a great deal of money relative to our peer group because we've been very successful. So recently we completed about a $70 million private placement, and that was subscribed to entirely by large institutional investment funds. So these are the sort of guys, we can go over a list in a moment, who are very familiar with the gold mining and exploration space, and they're now beginning to get significantly invested in Great Bear, really on the strength of the results that we've been coming out with for year after year on this project. Now, this is one of the biggest exploration programs in the world. And that means that this year we're going to be spending about $45 million on drilling off this very large series of gold discovery we found. And like I always say, the proof is in the pudding. You just need to read the results of the company. If you think gold is an attractive investment over the long term, then you should be interested in finding a high-grade gold discovery that goes to surface beside the highway in a jurisdiction like Red Lake. One of the benefits of the big program is that there's more news coming out of a company like Great Bear with a program this size than just about anybody else in the industry for consistency of news flow, timing of results, the whole thing. One of the functions or one of the consequences of having a very good gold discovery is we've attracted very good people. We could go over that in detail. It's available on our website, but top mine builders, people that have built billions of dollars worth of mines, sold billions of dollars worth of mines. These are the kind of people that are involved in Great Bear that form the management team and the board of directors. And these are very good guys. They know how to get the job done. What we have likely on our hands, and always we have to prove this with the drilling and the economic studies that we intend to issue next year, but we think what we have here is a tier 1 gold discovery. And there aren't very many companies in the world that can say that, because out of the hundreds and hundreds of gold mines in the world, there's only 30 that you could characterize as tier 1 gold discoveries. None of them are owned by companies like Great Bear, a small company, relatively speaking. And that's what makes this sort of an exceptional discovery opportunity. With that, I'll go to the next slide. We have performed very well relative to our peer group. So we've outperformed gold as an asset, and we've outperformed the group of our peers on the GDXJ index. That's the big index run by VanEck funds in New York. So you can see we've got a list of analysts on the bottom left of this page. Their reports are fantastic. If you want to understand the project, it's a lot better than listening to me over the course of 5 or 6 minutes to try to get that depth. But these are great reports. They talk about that tier 1 potential, that major mine potential for the project. And we can go over all that, at a time when we have more time. The guys that own the stock right now, management, we own a good chunk. We did not have what would typically be referred to as founder shares. It's a very different philosophy with Great Bear. And when you look at it, it's shown with the share structure. Like, unlike many of our peers, we only have, with $100 million Canadian in the bank, we still only have 57 million shares issued and outstanding in this company. And that's because at every stage in the process, we only spent what we needed to spend to grow it to the next level. We only raised what we needed to raise. And the share ownership with management is shares that we've bought in the market and we bought in private placements. So nobody in this company got stock for a penny or a few pennies. We had to earn it over time, buy it over time like everybody else. And that's how we care about the share structure. So that's why the share count is so low, the market cap is so high, and we've been successful by not wasting shareholder money. So this has attracted a number of major investors now. You'll be familiar with names like BlackRock, like Franklin Templeton, 1832 Asset Management, VanEck Investments. These are guys that you have a choice when you're putting together a company like ours. You can bring these guys in early. You can bring them in at 10 cents, 20 cents, $1, or you can do like us and make sure that they come in and they begin initiating a position once you're already north of $10, $15, this type of range, because these are companies, these are investment companies that understand future growth and future value. And if they're already fully priced in and they've netted the returns they're expecting, and you brought them in at a low level, you've effectively issued a cap on your share price. With us, we're just bringing these guys in now at a market cap of roughly $750 or $800 million. So with that, I'll go to the next slide. Very good people, as I mentioned before. Next slide. This is a location map for the project. There's an aerial view of the project on the top right of the image. You can see it's not sitting on top of a mountain in the Arctic or under a lake. It's a number of very high-grade discoveries. You can see the road on this image that drives over the project claims, the power line that feeds all the mines in the area on the project claims. And you can see that we're located next to one of the biggest mines in this region. The Red Lake mine has produced over 25 million ounces of gold. Next slide.
Chris, I'm sorry to jump in.
Yep.
Sorry. Can we just jump into some questions?
Yeah, but I'll just say this because this is for sure going to get asked. So this is a list of potential peers in terms of project discovery. So you can look at these sort of tier one type assets. We should have some information about this. So we're drilling the heck out of this project right now, and there should be results out in terms of these sort of resource calculations by about next year. And at that point, if we prove what's on this list, you can see that these sort of tier one assets tend to be worth in the multiple billions of dollars. And with that, I'll take a question or two.
Very good, very good. Okay, so first question, in terms of production size and grade potential, who would you say are the closest comparisons?
I'd have to look at something like the Hemo deposit. That's produced about 23 million ounces. It's owned by Barrick. Or you could look at Canadian Malarctic. That's the largest mine in Canada. It has a smaller footprint than ours physically, but it's about 11 or 12 million ounces, and it's the most profitable operation for Yamana Gold and for Agnico Eagle. So those are systems that have similarities in terms of size and gold endowment to what we're looking at here. Of course, we have to prove this with drilling and the economic studies. We only have 400 holes so far. I'm saying that tongue in cheek, obviously. Should be about 700 drill holes by the end of the year. But at that point, we should be able to put wrap some initial economics around this and make good on those kind of statements.
Wonderful. Okay, so that's all the time we have for questions, but thank you so much for that presentation. I know it's fast.
Chris, thanks so much. Empress Royalty is our next presenter. They're focused on building a strong portfolio of global investment opportunities in precious metals mining companies, concentrating on finding industry partners with development and production stage projects who require additional non-dilutive capital. We're joined by Alexandra Woodyer, CEO, with over 20 years experience in the mining industry. Alex started at Pricewaterhouse before joining Endeavour Financial, a global mining finance advisory firm. During her investment banking career in London, she was involved in the successful completion of over 1.5 billion in financings. Empress trades on the venture exchange under EMP. Please warmly welcome Alexandra.
Thanks so much, Liz. So Empress Royalty, we are strategically partnered to create value through gold and silver investments. Next slide, please. Forward-looking statements also available on our website, which I encourage you to have a look at. Next slide, please. So Empress, we are a new precious metals royalty and streaming creation company, started trading on the TSXV under EMPR in December and on the OTC in February. Our initial portfolio consists of 15 royalty and streaming investments, and we're focused on building a strong portfolio of cash-producing assets, currently negotiating over $75 million of potential investments. We have strategic relationships with Endeavour Financial out of London and Terra Capital out of Australia, who provide us with global mining finance networks to generate deal flow. We have exclusive access to Mexican royalty and streaming deals through a strategic alliance, which we signed in August with Ascendo Banco. Over 250 years of proven management and board experience in mining finance and $6 billion of completed transactions. So a very strong mining finance focused team at Empress. Next slide, please. I'm going to talk a little bit about our three partnerships, again, being Endeavour Financial, Terra, and Ascendo. Next slide, please. As Liz mentioned, I'm ex-PwC and former Endeavour Financial. The managing director of Endeavour Financial, being David Rhodes, is also our executive chairman and chair of our investment committee. Endeavour is able to help me identify, structure, negotiate transactions for possible investments. This gives me access to their cash flow modelers, financial analysts, engineers, geologists. So it really helps us source deals as well as execute on them. Next slide, please. In August, we signed a strategic alliance with Ascendo Banco. Ascendo Banco is an active investor and lender in the Mexican mining industry. They've got over 30 different mining companies, private and public, that give us a really good access to opportunities there. A good example of the relationship with Ascendo is when they provide a debt facility, say for $7 million, and we come alongside of that and provide a royalty or stream for $3 million, and that $10 million will allow a company to get into production. Next slide, please. Our third strategic partner is Terra Capital out of Australia, run by Jeremy Bond. It's become quickly one of the best performing boutique fund managers in the country. This gives us access to not only Australian deals, but Australian listed companies and projects internationally. And Jeremy's been an active investor in the natural resource space in Canada for the last 10 years, so it gives us a great capital markets network. Important to note that all three partners, including management and board, own 55% of our company, so very much in line with our shareholders. Next slide, please. Shifting into our investment focus, what we're looking for in terms of investments. We're focused on development and production stage projects. That's either to get them into production or to expand upon what they have. We're looking at small and mid-tier companies, both private and public. We're looking purely at gold and silver, so very much precious metals focused. We're looking globally with our relationship with Ascendo. We're seeing quite a few opportunities in South America as well as opportunities in Africa. And our investment size is anywhere from $500,000 up to 20 million, but the real sweet spot for us is that $1 to $10 million investment size. Next slide. I'm just going to touch quickly on our portfolio. We currently have 15 investments. We've got 3 that we're advancing that we have exclusivity on, term sheets done, due diligence is underway, and we're working on the documentation, and we have 11 in our pipeline. Next slide. One we just announced last week was the Manica royalty in Mozambique. This is a $2 million investment for us for a 2.25% royalty. This should be in production in Q3 2021. Annual cash flow, which is obviously what we're very much focused on, for Empress is roughly 1.2 million US. Next slide, please. We also acquired the Pinos royalty in November. This is a $1.5 million investment for a 1% royalty on this project, which should be in production in Q1 2022. Annual cash flow is about $200,000. This is just one vein out of 7 on the project, so we're expecting this one to get quite a bit sexier. Next slide, please. Our investments in progress. We're currently working on a silver stream in Mexico with Denison Mines. This project should be in production in Q1 2022. They just announced that they've got a full financing package to get this in place. We've got a stream that we're looking at in Peru. We've got another one that we're looking at in Kenya. Both are in production. Next slide. I'm going to run out of time. Sample of our pipeline. You'll be able to see this on our website. Production, curation, and the gold and silver focused. Next slide before you guys cut me off. We could jump to the next one after this. We've got $7.5 million cash, 72 million shares outstanding, no warrants, no options. And again, our partners are in line with the shareholders owning 55% of the company. Okay. Next slide. New precious metals royalty, 15 investments, focus on the creation of financing solution for our mining partners. And we're looking to create value by generating revenue and hopefully be able to establish a dividend policy for our shareholders. And that's it.
Thank you so much for that, Alexandra. So a question that's come in, there have been quite a few new royalty companies entering the junior space. What makes you different from your competitors?
It's a question I get asked quite a bit. There's a lot of new entrants in the space, and I think it's great that investors have options in different types of royalty investments. For us at Empress, we're very much focused on the creation of financing solutions. So working with mining partner companies, again, to help them to get into production or expand upon what they have. So very much revenue focused, so we can get to a point where we can establish a dividend policy.
Wonderful. Okay, we have time for one more. Empress has achieved many milestones since its inception, including listing on the TSXV and OTCQB. What can investors look forward to in 2021?
We are going to continue to execute on our business strategy. We are, as I was briefly mentioning there, some of the ones in our pipeline that are in production. So we're just going to continue to expand upon what we have, bringing in that $1 million to $10 million investment size and get revenue into Empress.
Fantastic. Thank you so much for that.
Thank you so much.
Thanks, Alexandra. All right, Aftermath Silver. They offer investors a rare, pure silver exploration play in Chile and Peru, two of the world's top jurisdictions for both mining and silver. Led by a respected team who have engineered past successful exits and buyouts for shareholders, Aftermath has assembled the right combination of talent, properties, strategy, risk management, and timing for investors seeking quality silver opportunities in today's precious metals market. Aftermath Silver trades on the venture under AAG. Please welcome Ralph Rushton, President and CEO.
Hi, Liz. Thanks very much, Liz and Yolande, for putting this on together with Fasken. Last time we met was at a very eventful conference in London. Back then, our share price was 27 cents with a market cap of about 15, 16 million. We're currently trading at about $1 with a market cap of 140 million. So we put growth together as we indicated we would back then at that conference. Next, please. This is the important forward-looking statement slide that we will be making forward-looking statements in this presentation. Next, please. So when the company was put together, the idea was to capitalize on what we thought was a potential increase in the silver price. And we didn't see too many pure silver projects, pure silver companies out there at an early stage of development. So we were able to raise some capital, pick up 2 projects in Chile through acquisitions, and then we moved into Peru and picked up a 3rd project there. Both countries are premier mining jurisdictions with established workforces and a good mining framework. And our other focus was to look at projects with good infrastructure, which I believe Chris touched on earlier on with the Great Bear presentation. Next, please. So the objective, build a silver-focused exploration, development, and mining company, take 3 projects, focus on projects with infrastructure, preferably with resources, historic resources, or close to a resource estimate. In other words, avoiding the early stage exploration discovery risk, and advance them as potential open pit projects. So we're at the stage now where we're starting to de-risk those projects through project development activities. Next, please. So here's the map of where our projects are. We've got 1 in southern Peru in the district of Puno, and 2 in northern Chile. You can see the contained ounces there. The Berenguela project, the ounces are hosted within a resource of about 36 million tons, about 85 grams silver, 0.8% copper, and an inferred of about 10 million tons at 88 grams silver and 0.67. Chayacura, we defined that resource earlier this year. That's about 6.6 million tons in indicated, grading about 5 ounces silver and 0.27 gold. And Cautionary will be the smallest of the projects in terms of contained ounces. That's about 5 million tons at 100 grams in the indicated category. Next, please. So I'll give you a little bit of a slideshow, a few slides of what the projects look like. This is the Berenguela project in southern Peru. In the background there, you can see the village of Santa Lucia. And in the foreground are the old workings from the historic Berenguela mining. The black rocks there are manganese-bearing and silver-bearing rocks. There's also the yellow that you can see there. That's another form of the manganese mineralization. Next, please. So we've recently published a 43-101 report on this property. That was last week. It's a purely descriptive report benchmarking the current state of work on that project. We acquired this from SSR Mining for a total of about $21 million over the next 6 years. And we have to complete a pre-feasibility study, which we're leading into shortly. The work we're doing at the moment is metallurgical work and the work that you need to sort of lay the groundwork for the pre-feas. We have landowner agreements signed with all the local landowners, and we are kicking off the social community engagement work. And Santa Lucia is a mining-friendly town, so we don't anticipate any issues with communities. Next, please. This is the Chayacura project, the second project, the middle of the 3 that I showed you from north to south. It's got a history of mining going back to 1772, one of the old colonial mines. It's produced quite a lot of silver and gold, and the dark shapes you can see there are the old mining stopes. It's less than an hour off the Pan American Highway, and it's below 1,500 meters, and it's close to power. And we access it from the mine road to Quebrada Blanca. So it's from an infrastructure standpoint, it couldn't really be better. Next, please. We published a 43-101 mineral resource on this project a few months back. That was together with a 43-101 property report. We're currently on site, logging core, cutting and sampling is underway of historic core that was never assayed. We're looking to try and identify additional mineralization above the old workings that would allow us to develop an open pit project down the road. And that's going to feed into our own drilling and planning for a pre-feasibility level engineering study, kicking off sometime within the next 12 to 18 months, we hope. Next, please. And this is the third project. This is Cautionary, the most southerly of the three. Again, it's less than an hour off the Pan American Highway. It's a slightly higher up, about 2,500 meters, but we're not talking about high Andes exploration here. It's very easy to get around, as you can see from the terrain. It does have a history of mining that stretched to about the 1980s, and what you can see there are the old workings. Next, please. Again, we prepared a 43-101 mineral resource for that project, along with the 43-101 report. That was completed mid-year last year. So that's going to feed into additional work, again, heading for a pre-feasibility level engineering study. So the first thing we need to do there is to survey the underground workings, because drill machines don't like underground opening. They're not particularly kind on heavy equipment. We're also doing metallurgical. We plan to do metallurgical test work. There's an old heap leach dump there, and we will collect some additional mineralization and do test work on that to see what the best process route is. Next, please. So very, very quickly in summary, so we've got 3 active projects, and we think we're now one of the leading silver developers on the TSX venture. We think we've been rewarded on our share price by that, and obviously through an increase in the silver price recently. All 3 projects are being assessed for the open pit potential. The priority projects with Berenguela and Chayacura, both of which we hope to take into initial engineering studies over the next 12 to 18 months. That gives us a highly attractive growth pipeline. Both jurisdictions are very favorable mining jurisdictions. We see no issues. There are no communities around either Chayacura or Cautionary, and the community close to Berenguela, Santa Lucia is mining friendly. And we also have excellent trading liquidity. We trade on the OTC as AAGFF and the venture as AAG. And the combination of average trading volumes between those 2 exchanges exceeds 1 million shares a day, and it has done for quite a few months now. Next, please. This is a slightly out-of-date share price. As of today, we're trading about $1. All precious metal stocks have come off recently. But you can see our trading levels there, over 1 million shares a day. Largest shareholder is Eric Sprott with about 24 million shares. We've got about 132 million issued and outstanding for a market cap currently of about $132 million. Next, please. So that's Aftermath Silver in a nutshell. If you have any more questions, I'll be happy to take them.
Thank you so much for that, Ralph. It is so lovely to see how far Aftermath has come since November 2019, which now seems like a lifetime ago. But the first question we have for you is, how has COVID impacted your exploration?
Well, it's been tough. It's restricted, certainly restricted international travel. So management have found it hard to get down there to see the projects, and Chile in particular. You know, COVID was popping up all over the place. One city would become open and people could travel again, and another would shut down. So it's been tricky to get people to site. So it's certainly delayed the program by 6 to 9 months, I'd say. But you know, we're starting to see some light at the end of the tunnel, I think.
Yes, let's hope for all of us. And how has the community situation at the Chalacolo and Berenguela projects been?
Well, we've recently signed access agreements with all of the landowners over the Berenguela project. Those are 24-month access agreements. So we have free access to that project. The community, as I said there, I believe there's a large statue of a miner in the middle of Santa Lucia. So they're fairly mining friendly. And there are no communities within 30 odd kilometers of the Chayacura project. The nearest would be a town called Pica. So again, it's a mining friendly area. I think most of the population there work at some of the large copper mines that are nearby. So no, we don't anticipate any issues, but you know, you can't take that for granted. You have to maintain good relationships.
Right, very good. Okay, well, thank you so much for that, Ralph. That's all the time we have.
Thank you, Ralph. Our final presenter this afternoon is Jack Lundin, the CEO and Director of Bluestone Resources, a natural resource company focused on advancing the permitted high-grade Cerro Blanco gold project located in southeastern Guatemala. Jack has been involved in the natural resource industry his entire life through exposure to several Lundin Group companies. Hearing more about Bluestone's advancements with their gold project is a great way to wrap up today's panel. Bluestone trades on the Venture Exchange under BSR. Please join me in welcoming Jack Lundin.
Thank you very much, Liz, and thank you for giving me the opportunity to present here today. We've got a very exciting story to tell here with Bluestone Resources and our flagship Cerro Blanco project. So again, thank you so much for having me. And over the next few slides, I'll be talking about what we've been working on, really kind of a new idea and a new concept for this project, and really excited to bring all of those that are participating through that. So please go to the next slide. Before getting into the presentation, I will be making forward-looking statements, so please read these cautionary and risk factor statements on our website. Next slide, please. So corporate structure, before getting into the Cerro Blanco project and what we've been working on, we are on the TSX. We're currently trading at around $1.80 a share with 143 million shares outstanding. That values us at around $255 million market capitalization. This is a Lundin Group company, as Liz was saying, so the Lundin family controls about 26% of the outstanding shares. And we've also got one of our partners, CD Capital, who is a large shareholder. And most recently, they were a big supporter and shareholder of the last company I was working with, Lundin Gold, where we took Fruta del Norte from study phase into production. And we're looking at doing the exact same thing here, advancing a new high-grade gold project. And that's exactly why I'm here to present to you all today. So if you could please go to the next slide. Really just a little bit about the history of Cerro Blanco. This project was discovered back in 1998. It's passed through several hands, through several owners, and it has always been contemplated as an underground development project. In fact, in 2006, when Goldcorp acquired Glamis was the former owner of Cerro Blanco, they rapidly advanced with an EIA permit for an underground development in 2007. So they were advancing the project, and for various reasons, the project advanced and then went on to care and maintenance. And back in 2017, Bluestone Resources was able to acquire the project for around 20 million US. And since that time, our understanding of the geology has enhanced significantly. We've essentially had rigs turning, and we've been drilling out this deposit since we picked it up back in 2017. And we've brought together a very experienced team of project development professionals. So in 2020, when I joined as the CEO, we were able to bring a lot of the team that came from Fruta del Norte to look at all of the technical aspects and social with the Lundin Foundation to really understand how to best advance this project. With the successful drilling that we had in 2020, we really understood that the near surface mineralization, and if you please go to the next slide, shows that this deposit will be much better and it's very amenable to a surface mining operation. And what that means is that with all of the data that we have and the team that we have in place, we were able to really check through the underground development scenario and understand that with a robust underground project, we could produce around 1 million ounces of gold, but with an open pit concept, we're actually doubling the resource of gold, doubling or tripling the resource of silver, and essentially doubling the production of gold, tripling the production of silver, and looking at a much less technically challenging, which means we can employ more local labor to advance this project, to develop it and produce from it. And we're essentially, with this new PEA concept, tripling the value of the Cerro Blanco project. So if you please go to the next slide, I'll show you exactly what I mean, because this is a picture of the block model in situ. And really what we understood from that 2020 drill campaign, a lot of those holes that were drilled from surface had very attractive mineralization that was shallow mineralization, showing around 100 to 200 meters of around 2 to 4 grams per ton, which meant that, this coupled with our understanding and all of the work that had been done in the past, this really is a project that's very amenable to surface mining. And therefore, when you look at this cross section on the bottom right side of the screen here, you're able to see that the geometry of this deposit, which is classified as an upward flaring vein array, The gold is locked in quartz veins, and there's several feeder veins that flare out and go near surface. Therefore, it does look like an upside down cone. And again, it makes it much more amenable, much more profitable to mine it as a surface operation. The pink on the screen is the high grade core, which is over 10 grams per ton. And that is tightly held within a lower grade mineralized envelope that ranges from around 0.3 grams per ton to 1.5 grams per ton. But as you get closer to those high grade veins, the mineralization actually shows grades going closer from 1 to 5 grams per ton. So this is actually a very high grade underground development concept, but also a decently graded silver and gold project that has a very robust production profile, which I'll show in the next slide, please. Before getting into the production profile, I think it's just important to touch on what the results of this PEA yielded. So as it is a bigger project, the underground was contemplating around a $230 million initial capital. Now we're looking at a $550 million initial capital, but because we're doubling the production of gold and tripling the production of silver and removing a lot of those technical risks and technical challenges with an underground concept, we are yielding around a $900 million US NPV at a 5% discount when using a $1,550 gold price per ounce. That means we have about a 2.5-year payback period and an IRR of around 28.5%. So very attractive economics with this new project. Next slide, please. So here you can see the new production profile. With the optimized pit scenario, we're able to look at a profile that can generate over 300,000 ounces of gold produced per year in those initial years. And at that $1,550 gold price, we'll be generating over 300 million in free cash flow per year during those initial high grade years. And really what that does is it definitely changes the playing field for us, because the maximum production for an underground development scenario was around 150,000 ounces. So all in all, I mean, we've really changed the dynamic of this project and turned it into a very robust open pit scenario. Please go to the next slide. We stack up against our peers now, as we are a surface mining operation with a low strip at about 2.4 to 1 for waste to ore. But also, I think what's very important here is now that we've tripled the value of this project, when you compare us to our peers, our market cap versus our average annual production shows that we have a significant room to grow once the market is able to digest this new concept. Please go to the next slide. So our plan now, because of the information that we have on this project, is to rapidly advance a PEA through to feasibility study, to go in and get a new EIA permit for an open pit concept, and to advance with the project financing package and try and get ourselves into development by the end of next year. So we do have a very efficient timeline ahead of us, but we know we have the team in place and the existing understanding of this project to move it forward in an efficient manner. Thank you.
Thank you so much for that presentation, Jack. Time for a couple questions. What is the exploration potential in the area? Do you think you will be able to increase the resource?
So not only do we have an upside potential with the resource of Cerro Blanco, there is a 2-kilometer mineralized trend to the north, and we definitely intend to follow up on the exploration in the north of the area. We are licensed to drill up there, and once we're in the development phase, we'll look at doing some brownfield exploration to hopefully add some ounces to that mine plan even further than what we've just done now.
Perfect, thank you. And last question, how is it like operating in Guatemala?
I've been spending most of my time here since November, after the borders opened up, since Guatemala shut down because of COVID. They closed their borders, and we've got very good engagement both at the national level here in Guatemala City with the various ministries, and at the local level we've been engaging with stakeholders, and they're very excited to see a project advancing, as their number one concern here is adding jobs to their community that has been negatively impacted from the pandemic. So overall, the engagement is strong, and we continue to work with the Lundin Foundation to grow that relationship throughout the next phase of this project.
Wonderful. Thank you so much, Jack. That's all the time we have. Thank you so much for that presentation.
Thank you very much. Appreciate it.
And that concludes all of our presentations. Over to you, Jack.
Well, guys, thank you. Deal Gateway curated such a fantastic group of panelists. It was really quite interesting from my perspective because, you know, it touched on so many different types of minerals, different jurisdictions, different stages and sizes of businesses. So we really got a buffet of great companies. So thank you so much to our presenters. Thank you to Deal Gateway and to Liz and Yolande, and to all of our guests for joining us. I want to remind everybody that we're going to do this all over again tonight at 8 Eastern time. There's going to be a slightly different focus, and there'll be some new and different companies presenting. So if you haven't had enough mining presentations, please join us at 8 p.m. Eastern time tonight. And with that, thank you very much.